You trained for the career. Now build the business. This is the Muse Spring Minute, where aspiring tax professionals learn to launch and scale their own practice. Here's your host, Jason Carr.
Tax preparation is a great entry point into a client relationship. But if your entire business depends on February, March, and early April, you're building a seasonal job, not a year-round practice. That may be fine at first. A seasonal tax business can create meaningful income. It can be a strong side business. It can help you enter the profession without quitting your day job. But if you want to grow, you eventually need to think beyond the return. Today, I want to talk about how tax prep clients can become year-round advisory clients. The starting point is simple. Tax returns reveal problems. A tax return can show income patterns, business activity, missing records, cash flow issues, underpayment penalties, entity questions, payroll problems, and planning opportunities. Most clients do not know how to read those signals. They see a refund or a balance due. You see the story behind the numbers. That is where advisory begins. Advisory does not mean pretending to be a CFO on day one. It does not mean giving complex tax planning advice beyond your training. It does not mean creating a service menu full of words the client does not understand. At the early stage, advisory means helping the client make better decisions between tax seasons. For a new or growing tax practice, the easiest advisory opportunities usually start in 5 places: estimated tax planning, bookkeeping coordination, business expense review, entity and payroll readiness, and basic tax planning check-ins. Let's start with estimated tax planning. If a client is self-employed, has 1099 income, owns a small business, or has investment income, they may need help planning for taxes before the return is due. This is one of the most understandable advisory services because clients hate surprise tax bills. You can offer a mid-year and year-end estimate. The deliverable does not need to be complicated. You review year-to-date income, expected income for the rest of the year, withholding, deductions, and prior year tax. Then you help the client understand whether they appear to be on track or whether they may need to adjust. That service creates value because it gives the client time to act before the year is over. A simple estimated tax planning package might include 2 meetings per year, one in June or July, and one in November or December. After each meeting, the client gets a short written summary of the numbers reviewed and the next steps discussed. That is advisory. It is specific, it is practical, and the client can understand why it matters. The second opportunity is bookkeeping coordination. Many tax clients do not need full-service bookkeeping from you, but they do need someone to tell them whether their records are usable. You can offer a quarterly records review. You're not necessarily reconciling every account or becoming the client's bookkeeper. You are checking whether income is being tracked, expenses are categorized reasonably, business and personal spending are separated, and the client is saving documents needed for tax time. That service can make tax season easier for both of you. It also gives the client a simple promise. Each quarter, we will look at your records and identify what needs to be cleaned up before tax season. That is much clearer than saying, I offer advisory services. Clients do not buy vague advisory. They buy relief from specific problems. The third opportunity is business expense review. New business owners ask the same questions over and over. Can I deduct my home office? Can I deduct my phone? Can I deduct my car? Can I deduct meals? What about software? Training? Can I deduct the laptop I bought for my business? They do not only need answers, they need a system for thinking about expenses. You can create a business expense review session where you walk through their categories, explain what records they should keep, and help them avoid sloppy assumptions. This is especially useful for Schedule C clients because many of them are running businesses without thinking like business owners yet. A 1-hour expense review can become a paid advisory product. It can also prevent problems later because the client learns how to keep better records while the year is still happening. The fourth opportunity is entity and payroll readiness. As clients grow, they start asking bigger questions. Should I form an LLC? Should I elect S corporate status? Should I hire employees? Should I pay myself differently? Should I set up payroll? Should I set up business accounts? This is where scope matters. Entity choice in S corporation elections can involve legal, tax, payroll, and state level issues. Depending on your credentials and state rules, you may need to refer part of that work to an attorney, CPA, enrolled agent, or payroll provider. But you can still identify the issue. You can say, your business is reaching the point where entity structure and payroll treatment should be reviewed. That referral can be part of your value. Clients do not expect you to do everything. They expect you to know what needs attention. The fifth opportunity is the basic tax planning check-in. For many clients, a tax planning check-in is simply a structured conversation before year-end. Did income change? Did marital status change? What about dependents? Did the client buy a house, start a business, sell stock, move states, take retirement distributions, hire workers, or buy equipment? Those life changes affect taxes. If you wait until the return is being prepared, most planning options are gone. A year-end check-in gives the client a chance to act while there's still time. Now let's talk about packaging. The biggest mistake is selling advisory by the hour with no clear deliverable. Clients do not wake up wanting advisory. They want fewer surprises, better decisions, clearer records, and a clearer plan. So package the outcome. You might offer a quarterly tax readiness review, an estimated tax planning package, a small business tax check-in, a year-end planning session, or a Schedule C records review. Those names are simple because simple is good. The client should understand what they are buying without needing a sales presentation. For a new practice, I would start with standalone offers before jumping into monthly plans. Test demand first. After tax season, identify 20 clients who had planning needs. Send a short message that says, based on your return, I recommend a mid-year tax check-in so we can review your income, withholding, and estimated tax position before year-end. The fee is X dollars, and the meeting includes a summary of recommended next steps. That is clear. If clients buy, you have the beginning of an advisory service line. If several clients ask for more ongoing help, then you can build a monthly plan. Monthly plans should be reserved for clients with recurring needs. A monthly plan might include quarterly estimates, email support, records review, and one annual planning meeting. But do not overload it. Scope creep can quietly destroy advisory services. Define what is included, define what is excluded, define response times, and define when additional fees apply. You're building a business, not becoming everyone's unpaid tax hotline. The best advisory clients usually reveal themselves during tax season. Look for clients who had a surprise balance due, self-employment income, messy records, growing income, business changes, thoughtful questions, or a clear desire to understand the why behind the return. Those are advisory candidates. Clients who only want the cheapest return may not be, and that's fine. Not every tax prep client needs to become an advisory client. Your job is to identify the ones who are ready. At MuseSpring, this connects to the scale part of Learn, Launch, Scale. Launch gets the practice open. Scale is where you build repeatable services, better pricing, stronger client relationships, and year-round revenue. That does not happen by accident. You create it by noticing client problems, packaging solutions, and communicating the value clearly. If you want one action step from this episode, do this after every return. Write down one advisory opportunity if you see one. Estimated taxes, records cleanup, entity review, payroll issue, year-end planning, bookkeeping support, referral need. By the end of tax season, you will have a list of clients to contact after filing season. That list may become your first year-round revenue plan. I'm Jason Carr. Thanks for listening to the MuseSpring Minute.
Thanks for listening to the MuseSpring Minute. Subscribe and leave a review so other future tax pros can find the show. The MuseSpring Minute is produced by MuseSpring LLC for educational and informational purposes only and does not constitute legal or tax advice. For guidance specific to your situation, consult a qualified professional. MuseSpring LLC is not a law firm.